Hey, good morning, everybody. Welcome to our show today as we prepare for earnings season to really get kicked off big time today with a lot of the banks coming through. I want to remind you again about our free report. We really want to talk today about looking at retirement issues and what some of those are going to look like. So we've got our free report on retirement strategies. I think it's something that's very important. Remember, retirement's not you don't get any do-overs when it comes to retirement. So we want to make sure that we get started on the right foot when it comes to our retirement and make sure we're using all the strategies that are available to us. And so we've put together a free report on retirement strategies, 5 specific things you need to look at. All you have to do is text the word retirement to 863-285-3815, or here on Facebook, you can look above this video, and in the post there is a direct link to the site to get that free report.
Time it's 8:38, 22 before 9. Time check in on money and find out what's going on Wall Street. And the word of the day is earnings season. Happy New Year, earnings season. Yes, means all the stuff that we're talking about these days for about a week or so in here tends toward being what the stocks are doing that we actually spend money on. What a concept. Downtown Sebring, we head to the offices of Statler Financial Services. Phillip Statler standing by. Phillip, good morning. Boy, we got a pile of numbers, huh?
Yeah, we do, man. I'm telling you, it's we got some morning numbers for folks today. That's for sure.
That's for darn sure. And we kind of been promising this. We got Citibank yesterday, and we were talking about how all the big financials tend to lead the parade, and we got 3 of the big ones starting out this morning. And probably the poster child for the financial sector this morning going to be Goldman Sachs. Boy, did they kick butt.
They did, Dave. And I'm going to apologize. I lost a website here, but I know they beat substantially by well over 50-60 cents a share. Revenue was gangbusters too. I mean, they did so well that they increased their dividend by over 40%, from 85 cents a share to $1.25 a share. So some good news there for Goldman. They're up 1.3% this morning before the market gets cranking.
That doesn't make them the top of my leader list, but they are the biggest gaining financial of the bunch today, because we got some interesting stories on 2 of the other ones that reported this morning. JP Morgan Chase reported, but I'm not showing them on my big leader list, even though they beat. That's kind of interesting.
Well, it is. So here's the deal with JP Morgan. JP Morgan, they did beat. They came in at about 30-something cents ahead of estimates. But 23 cents of that was because they resolved a tax issue dispute, and so it increased. They must have won because they got a big hefty amount back to their income statement, and so and they still would have beat, but not as much as everybody would have liked them to. And then their interest income was down, and looking forward, they kind of gave a little weaker guidance too, in terms of what they expect for the upcoming quarter. And so that's why they're trading down almost 2% this morning.
I was going to say, they're on my loser list this morning, and generally when you beat on the main metrics, you end up benefiting from it, but they're picking the reports out a little bit more this year. Another report that's doing about the same thing, Wells Fargo. They've been a poster child for getting in trouble with the government on and off over the last couple of years. They had a pretty substantial beat as well, but they aren't showing up on my winner list because when they started picking it apart a little bit more, their mortgage revenue was off by a little bit. They aren't making as much on loans. And even though they increased their dividend, they're not getting rewarded that much either, are they?
No, they're really not. And again, it's picking apart those metrics in terms of revenue and where it's coming from. I think is playing a big part in the financial institutions. Remember, we've seen interest rates drop here in this towards the tail end of last quarter, and so that could have some impact on some of the revenue that we're seeing.
Some of this, I think, part of it is the fact that we're up in nosebleed territory on the indexes as it is. And investors, even the ebullient ones, are saying, "Wait a minute here. I need good reason to go higher instead of just that raw earnings per share figure that's generally enough to throw a party." Would that make sense in terms of investment reaction?
But I think it definitely does. You know, you're right. We are in nosebleed as we continue to set records in the indexes. And so I think that plays a big part too in what people are expecting out of stocks and how much more they're really willing to pay, Dave.
Yeah, they're really kind of holding CEOs to a higher standard, which probably, when you think about it, is a healthy thing. Once we get out of the financial sector, we got some interesting stories to tell as well. You and I were kicking it around. I didn't see both of the tip sheets, but you saw them you saw them, and it looks kind of confusing. Big
It did.
transportation company JB Hunt. One tip sheet says they missed, the other one said they beat, and it looks like the investors are saying they beat, right?
Yeah, exactly. You know, I'm looking here at CNBC, and I'm saying, okay, they say they missed by 12 cents a share. Revenue was in line, had higher insurance costs. That kind of helped or hurt the bottom line. And then I look at the stock price; they're up almost 7-8%. So I have to do a little bit more digging, and I look over at one of my other tip sheets, and they say they beat. So I guess it depends on how how you shake the numbers out as a investor determines which one of those you like and which one you're going to follow. And evidently, more people are liking they beat than they missed.
I'd only seen the one that said they beat, so I wasn't surprised by them on top of my big winner list. And when you said they actually lost, according to some analysts, first reaction was, well, the voters have spoken, right?
Exactly. I mean, to be up almost 7% right now that tells me that's a pretty good deal.
Oh, yeah. Another reporting company we got out. I didn't mention whether or not you had the specifics on this, but Domino's reported, and they showed a pretty substantial revenue increase over last year, but evidently the market wanted more.
Well, they did. I did see Domino's. They beat by about 17 cents a share, which sounds pretty good to me. However, they missed on revenue by a little bit. But for restaurants, it's always same store, same restaurant sales, and they were only up about 3% on comparable same store sales, and that was not what analysts were looking for. And so that's what's taking the wind out of Domino's sale this morning, being down, getting close to 7.5% this morning.
Somebody in the executive suite at Domino's is saying, geez, even when I do the job well, I pay for it, right?
Exactly. And then the other one I have is a good old staple company, Johnson & Johnson.
Yeah.
They came in, they beat by 12 cents a share. Revenue was also well above forecast. They raised their full year outlook, looking for the rest of this year. They're not really getting much reward for it. They're basically flat right now as the market gets ready to open.
This is going to be an interesting earnings season, looking at investor reaction to what we'd otherwise consider a relatively positive report this year. The financials are probably the poster child this time. Dig 3 or 4 levels deep into the report before we make a trade, right?
Well, that's true. And then we look at retail sales, Dave. Retail sales came out at 0.4% growth rate, which is about double what was expected. They were expected to come out about 0.2% with the overall retail sales.
All right. I understand import prices as well. I was just flipping over to my other data sheet and I saw the 8:30 reports. Import price data also wasn't as much of an increase as they expected. So once again, inflation holding in check. So we're okay on that.
Yeah, we are. And so it's going to be interesting to see how we start. Yesterday we started good, and then we had kind of a rough ride throughout the day. And I think we pretty much ended to the upside, but not by much.
Yeah, I was going to say the upside setting the table for today was a small upside, but it was enough to set 3 new daily trading close records. Dow was up by 27 points yesterday. We start this morning at a record opening at 27,359. Standard & Poor's another record, but by only 53 cents. It starts out at 3,014, and the NASDAQ up by about 14. So we start the NASDAQ this morning up at 82.58. at the beginnings of the rush of earnings season with a lot of numbers to report every morning. Phillip, we're 45 minutes before the real money starts getting thrown around. Where are we going so far?
You know, we're pretty flat, actually, Dave. The Dow is set right now at up $23. The S&P 500 is up $1.50, and the Nasdaq's basically even right now. We got gold slipping a $1.50 right now, and then silver's basically up 1/3% to $15.41 an ounce, and then we got crude oil at $59.66 a barrel.
At least it's staying under 60.
Yeah,
for a
exactly.
little.
We like that.
Yeah, for a little while. Kind of odd on the international scene after that gross domestic product report out of China the other day. I expected the Asian rim markets to be off. China was up this morning, believe it or not. Japan is off by just a little bit at the close. European markets generally in green ink this morning, halfway through their trading day. Phillip, all this is confusing, and as we get into earnings season, reading deep counts for a lot, like we were saying. How do I find you to get a deep read on my financial plans for retirement?
Hey, a great place to start is our financial x-ray analysis of your current portfolio. To schedule your free analysis, call us at 382-0037. Great opportunity to figure out where you are and where you need to be. And then get your free report on retirement strategies. We've outlined 5 different retirement strategies to look at as you get ready to retire. It's easy to get. All you have to do is text the word retirement to 863-285-3815. And then join us every weekend for the Statler Financial Radio Show, noon on Saturdays, 10 a.m. on Sunday mornings on News Talk 730 a.m.
All righty. Streaming News Talk 730 at newstalk730am.com, and our little ditty every morning also streamed on 1057lightfm.com. And, of course, you podcast it later, right?
Absolutely. You can find this every day on Facebook. Just look for Statler Financial Services. You'll see the video and everything right there.
Phillip Statler is everywhere. Thank you so much, sir. We'll see you in the morning, all right?
All right, man. Thanks. Talk to you then.
Thank you. It's 105.7 Light FM and Statler Financial Services' own Phillip Statler.
Who will be?
Again, our free report on retirement analysis, strategies you need to be looking at when you get ready to retire. All you need to do is text the word retirement, 863-285-3815, or click the link in this post. It'll take you right to the page to get your free report. Hey, thanks for tuning in today. If you like what we're doing, please like our page at Statler Financial Services and share this video with your friends. Have a great one until tomorrow. I look forward to seeing you then.